What's going on, everybody? Welcome back to BenefitsCentral here with another quick update video. And real quick, we're just going to be going over Ethereum just because of what happened yesterday. Excuse me. But we did end up getting some rejection. I got a few DMs saying they were concerned about where we were going and where we were headed to the downside. Realistically, that was all anticipated. I said everything in my last video about how that was going. A lot of people got shocked. A lot of people got liquidated. I'm even in a long right now and I'm still holding, but a lot of people shouldn't have got liquidated with the info that I gave them, just because everything was said for you and everything did end up working out and executing the way that I said in the last video. So real quick, if we're gonna go, let's take a look on Ethereum real quick in the monthly, review what's going on again. So we ended up dumping after either double topping, forming a double top, or hitting just news or whatever happened. I forgot, COVID, there was a lot of stuff that happened, pushed us all the way down. Okay, whatever, the news likes to make up a lot of events to push the stuff down. If anything, we had an amazing pump for months back to back to back, and like I said in the last video, you want to respect the pump always. It came back at least a little more than 50% now. It's way more above 50%. So that's when everybody said that we were in a recession and we're in a downtrend. Just because it passed our 25 and then 50% of a return, meaning that the pump was going into a full reversal, and that's for the monthly. But now, obviously, finding some ground, finding some support. We do not have a 200 indicator on our monthly formed yet, just because there's not enough data for that to even be there consecutive. But other than that, we do have our 50 and our 20 moving average, and that's okay because realistically that is all we need for right now for the monthly, at least the monthly charts, just to see what is going on. And before I dive into the candles, just real quick, you can see that, like I said, the consecutive candles that get together, they form a head and shoulders. This is just another pattern that I like to point out, that I point out for myself and that I see, and it's usually a symbol, or showing you, it's a sign showing you that the stocks or whatever you're currently looking at is going to start to flip to the other side, to what the opposite of what it was currently doing. So if the trend was currently going upward, this forming what it's doing right now, a head and shoulders. Here's a shoulder, here's a head, here's a shoulder. And if it ends up forming this, then you know that we are currently going to go start to downtrend. That's why after this we ended up getting that full bar right after that. However, we did end up reversing off of our 50 moving average for the monthly, which is great. Ended up bouncing on it, playing with it right now, and that's why everybody is debating on whether we're going to continue to the downside or if we're going to continue rallying up, just because of what position we're currently in. We didn't beat that full red candle that pushed us all the way down, causing causing all of the problems that we have right now on the lower prices, and we didn't complete that bull 180, unfortunately. So we are currently waiting to do that. We almost attempted it here, but then we ended up getting wicked down, most likely on other time frames. There were indicators, 200, 50, and 20s pushing us down, as well as the news. But other than that, realistically, we ended up forming a GBI. I was excited for this. We sold. It didn't complete because the bears didn't have enough momentum. News came out, positive news. There was a lot going on. Ethereum split. There was a lot of stuff going on to help Ethereum throughout the months, or merge, not split. Excuse me on that. But other than that, then we ended up continuing, formed an acorn. We got that bull 180 to push direction into the opposition, and then we ended up going forward. Right now we are testing our supports, all of these support levels. We beat most of these wicks, beat most of these candles to our left. However, we do still have this high, and we do still have this original candle that pushed us down. Remember, this is always energy, and this is always power and momentum that you want to look at. So even if we stopped here, I would have waited to see if we could beat this candle, and if we couldn't, then that was a sure sign that we were going to continue. With this candle right here, we're battling it, and we rejected right here would have been a good sign to short as far as you could. Then we got a GBI. I shorted because that was a confirmation for a GBI for me, which is the opposite of an RBI, which pushes downward, and RBI pushes upward. Excuse me. However, the acorn coming in almost as a cross, almost as a pivot and a reversal. Especially with this, it's running out of steam for the bears. They tried to push and then couldn't, and then just couldn't get back down there. Bulls came back in with good momentum, most likely off of good news as well. And then now in our new monthly here with February, we're trying to push up past these 1700 levels after that great spike that we had and great bullish run that we had. But diving into the weekly real quick, just to show you guys what I'm talking about in more detail. After bouncing upon our 200 moving average, as well as squeezing between all of our indicators, this is why everybody's a little antsy right now, just because they don't know realistically what the market is going to do. Because realistically this looks bullish. However, with news, this can become very, very bearish. However, if you look just a little closer, we did reject, and this is why we rejected that amazing bull run yesterday. I believe it was around 12ish, maybe 11:30, but we ran all the way up, and I mean it was insane. I TP'd around 1700 and then got in real quick for a little one in the 1720s, and then we managed to get all the way up to 1750 before rejecting off of our 50 moving average on the weekly. Like I said, we do respect these indicators very heavily. Excuse me. However, we didn't make it too far down, found some support around 1650 and 1700, broke through 1700, came back down to 1650, finding some struggle support right now around here. If anything, I don't think we'll break through 1650. If we do, that's when we'll look into closing longs, and that's when we'll end up throwing some pieces of content out in the media showing that we are going to continue to the downside. But do remember that our beginning entry was on this bull reversal, on this bull 180 right here when we went all the way up. So this was extreme profits, would have left the market clean. Of course, don't get greedy and respect the pump always, because like I said, we did pump all the way. I mean, we literally pumped all the way up and then tapped here. Everyone expected it to continue and wanted more out of this, and everyone wanted prices past 1750. Realistically, we had room for it, but it was exhausting on the other time frames. And what I mean by that is that the RSI, the relative strength indicator, shows how consecutive we're being in one trend. And honestly, we were way overbought. As you can tell, we were way overbought before. We needed to come down and breathe just a little bit, just to see if we even wanted to continue forward. If we didn't, we'd consolidate and decide to trend back down, which would mean that we would get out of our long, and we would anticipate that we do see lower lows. However, I don't really see that for right now, just because of the great bounce that we got on the daily, weekly and monthly, obviously, but on the daily, we skyrocketed. Bull 180 again. Once again, this was another sign, another flash sign that you could get in for a bull run, and it was off of our 50 moving average and 200 moving average, which is insane. Like, that was a golden entry right there. We did take advantage of that, made quite a bit. Then ended up, flourishing up to the high ends of 1750, which we didn't completely capitalize on. But unfortunately, right now we are seeing a bit of more rejection, which is okay. We did end up forming this little acorn. Usually this is a top, and this means a reversal, as the bears or the bulls, didn't have enough momentum to complete a good candle or continue any momentum forward. So we are kind of caught up in a little bit of a trade right now, just watching it, keeping our eyes on it 100%. However, we did end up beating that, forming a reversal. This was a bear 180. If you were to look at it upside down, or if you just can look at it, it was a bear 180, but we did end up finding some support on our 20 moving average, and then that ended up pushing us to the higher side. Once again, finding support around 1650 and pushing past this. If we can continue and use this as a pivot point and continue to hit higher highs, which we did make a higher high over here. We had a double top formed, and then we ended up breaking that. I think the double top was here, and we ended up breaking it that same day for that double top, which was great, showing us that we have more momentum to continue to the upside. And that wasn't a rejection zone, realistically. That's why we were in that. We just didn't capitalize on the take profits. It would have been fortunate for us, although the market runs 24/7 with crypto, so you can't always catch everything. I don't like to put take profits and stop losses myself, just because I have a little suspicion, but I'm not going to get too far into that. I do advise that you do use take profits and stop losses, just because they helped me along the way when I was learning how to trade. But other than that, jumping in real quick to the 4 hour, just to show you guys a little more in-depth of detail of what I'm talking about. We are seeing an RBI on the 4 hour bouncing off of support of 1650, could have launched 1650 after obviously getting this bullish cross, and our 200 moving average, all of our indicators kind of winded up and binded up in a little bunch right here, and in a little end that's getting ready to explode or expand at least, and push us hopefully to 1700. If we reject off of 1700, we will enter a short, close our other trade, and we will come back down with it. However, this is looking still bullish, because remember, you have to respect the pump. This was a pump. However, like I said, 20%, 25% to 50% is still a healthy pullback. However, if we do any more than that, like I said, then we will end up going to the downside. Right now, we didn't really hit 50% at all. That would have been around our 200 moving average, which is totally okay. So we are still very healthy, finding support as well around our 1650 level, like I said. So as long as we continue to hold these levels and we continue to trend to the upside, we should be looking clear for higher highs, as we have marked right here our highest high for the past few days. Jumping into the hourly real quick, just to show you guys, we're getting this bearish cross. However, that was a cross right here, so we're trying to see what the bears or bulls are trying to do about this on this support zone area right here on 1650, if they want to end up breaking that to the downside, or if they end up or if they're going to try to push this to the upside. This can stretch all the way to 1700 and then actually reject and then continue to go lower. Excuse me. However, like I said, just the more candles that come out, the more data that you have to work with. So you don't really want to jump ahead of yourself too quick. But other than that, we're in the hourly. Not really too far that I can go down. Excuse me. Not really too much that I can go into detail now. However, I am going to just get a few things started for you guys on a few other things on pieces of content on the media. So if you guys want to go check that out, you guys definitely can down below in the links. Other than that, please make sure to leave a like, subscribe, and comment, and I'll catch you guys in the next one. Ciao.